This is Ospreyeye from MyChartCoach.com, and we're going to take a look at some of the stocks that are in play today. Okay, first up is SGY. We discussed this yesterday in our charts and videos. Posted this yesterday showing the setup, and the reason why this interested us was the move above an eventual close above EMA's 4, 8, and 13. Notice the bounce off of the 50-day simple moving average, and so today we were looking for follow through, and we wanted to see a break above the middle Bollinger Band, and that happened. The share price broke above the middle Bollinger Band, and then it actually broke above our next two targets, the 100-day simple moving average and the 200-day simple moving average at 883. Okay, that's going to be the key level to close above today. Notice the candle, the top of the candle is hitting the upper Bollinger Band, currently at 929. That's going to be the key level to break. Just above it is a parabolic SAR at 955. Notice the green dots here. Once the share price hits the PSAR level, the green dots will flip below the candles, and that's a parabolic stop and reverse. When you see the what we call the PSAR bull flip, that usually is a signal that a change in trend has occurred and there's more upside potential. Okay, so for resistance levels, what we have our eye on is this December 20th close, and we'd like to see a break above that. If that happens, what that'll do is that'll end up putting the 300-day simple moving average at 1703 on deck. But first things first, need to close above the 200-day and need to turn this December 20th level, close above that level and then turn that into support. But so far, what we want to see is a new uptrend starting. We'd like to see candles forming above these three levels. The middle Bollinger Band must hold, and that would get a new uptrend going. What we do like is this bullish volume spike, and then check out down here on MACD. There's a MACD bull cross. The black line is the MACD line. The purple blue line is the signal line, and so there's the crossover there is signaling that a new uptrend is starting. And then you have a nice uptick on plus DI that shows the bulls are taking control. Fasto is currently maxed out at 100. That means it's temporarily overbought. You get that when you're hitting a high of day. And then right here you can see RSI is in the bull zone between 50 and 70. So that is the sweet zone, and that signals more upside potential. Okay, so let's look at ENRG. ENRG is having a nice day today. Back here last week, we noticed this big volume spike last week on the 12th. Notice this move above the middle Bollinger Band. That was the attention spike that was telling you that it was heating up. And then today there was this follow through. What we wanted to see was a break above the 100-day simple moving average. That happened, and now the candles are pushing through and hitting back here on this August resistance levels. So you can see 55 and 60 to 62 are going to be the key levels to break. If you can get above this high close back here in August, then there could be a run higher. And so what bulls want to see is they want to see the middle Bollinger Band turn to support, and for this uptrend to continue. You can see that there's been an uptrend off of the lows. Something to look at here is Fasto has a little more room to run. RSI now is at overbought levels. Okay, so check out here on IRG. IRG has made a really nice move today. IRG is filling the jar, and you can see here it's heading back to these prior levels back here in August, and notice it made a bottom down here in December, and it's been going up, pulling back, making higher lows, pushing higher, making higher highs, higher low, higher high, higher low. We think this makes another higher high. What we want to see here is a break above this high close horizontal resistance. If that happens, we're thinking there's a run to $1. The dollar land right here is the big level. So you're going to want to see a close above this high close and a break above $1, which was high of day here, and that would set up the 200-day simple moving average on deck. So first things first, got to break this high close in $1, and then a break above $1. Many times you see explosive moves, and that should lead to a run to the 200-day simple moving average. The middle Bollinger Band is the key level to hold. As long as that's holding, the uptrend should continue. If it breaks, that'll signal downside risk. We do like the bullish volume spike down here. Look at MACD. It's setting up for a bullish crossover, so bulls want to see that crossover to signal more upside. There's a nice uptick on plus DI, and then Fasto and RSI are in the bull zone, and they both have room to run. So this looks like it could push higher. ETRM is another play that's in play today. Okay, this has got a gap fill today there was this gap down, and then now that gap filled. Now the top of the gap is going to be the key level to break. The candles are going to need to get above the middle Bollinger Band, turn that level into support to start a new uptrend, and then they also need to get above this EMA 8 resistance. Once they get above EMA 8, they can potentially run back to the 200-day simple moving average. A lot of times when a gap fills, that becomes resistance, and so getting above this top of the gap level is going to be very important to head higher. Fail to turn the middle Bollinger Band into support, and this 100-day simple moving average, notice the break above the 100-day simple moving average will signal downside risk. There was a bounce off the 50-day simple moving average. Notice there's an unfilled gap below down to $5. If the 100 fails to hold, you could see the 50 retested and possibly this gap fill. Okay, so what bulls want to see is the uptrend heading back up to the 200-day simple moving average. There is a nice volume spike today, but that upper wick does show some profit taking. A couple more plays to look at here. DFFN is in play today. Notice it's another bounce play. See how it had this big move, a big run up to about $15, and then it pulled back. This is the first good bounce after the pullback. It's coming down to this middle Bollinger Band and 50-day support levels. It's hitting 100-day simple moving average resistance. It will need to break above that, close above that level in order to run back to the 200 and 300. The 200 and 300 and this high close here on the 10th are going to be the key levels to break in order to head higher. First things first, though, bulls need to see a close above the 100-day simple moving average, and they need the middle Bollinger Band to hold. And then the last play here is IOTS, and this is another stock making a bullish move today, and it had broken above the 200-day simple moving average, and now it's hitting back here on July resistance, and then if it could break above that, it could hit up here at June resistance and the 300-day simple moving average. That is the next target, the 300-day simple moving average at 402. It will need to break that level to head higher. Many times hitting the 300-day moving average signals a top. You can see here it busted right through the 200-day simple moving average here at 292. That will be the key level to hold on a pullback. Okay, thanks for viewing these charts. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.